Good morning and evening to you all, wherever you are joining me at this hour. Welcome to 383 edition of Investdata Trading Academy Live with Ambrose. Yes, I will tell you that the market and the matured market are looking up right away, driven by what positive sentiment for intelligent, artificial intelligent, tech stock. These are the one moving the market now. Despite the increasing geopolitical tension, we're seeing that there's kind of a relief, driven by this positive sentiment for tech stocks. Despite the kind of uncertainties surrounding whether there'll be rate cuts, in different regions, either in US and also and Europe, because these are the major, where we have a major the central banks that when they sneeze, other people catch cold. But now that they are kind of playing down rate cuts coming early as an angle right now in this market. I also miss as to speak now, but the good news that market is up in this market market. You can see that the market in Asia was also up this morning, even when the kind of disappointing GDP figure that came from China is been also kind of looking to showing that the China economy is also in that region. But see with all this, so that the market there have opened also in a lighter mode, looking up again, which is a good one. But if you look at that region, I see that Japan market is also leading the doing the best performance in that there's also a slowdown. Inflation is also cooling. This also going to support the negative interest regime that are saying there. That also will boost the market to be also to record its 34 years high. As market has opened that arena. But also don't forget that the oil price also, is also oscillating as a result of the major oil consumer, which is China economy is dragging feet. That also has been that the focus for this year. Also, despite also the cold winter, that also the weather affecting production in US, but still also oil price pulling back a little this hour, going up again. The oscillation has continued. But want to see. Also, don't forget that what is happening in Black and Red Sea also is not helping matter in terms of oil price and commodity price. And also stronger dollar has also pushed a lot of price up. That is why seeing that you saw in uh, in UK, during this week, that when their credit figure was looking up, and that of US, because like these are the things that also the central banks, the monetary policy are also looking at before they can make their decision. These are why you see that despite that the market are, they are the factors that are that are being considered. But for weekly gain, we expect that to see that Europe might likely, or for that of Asia likely to also have a weekly loss because of just rebounding. They've been recording losses all this while. But this morning, the last trading of the we saw a kind of looking at sectoral rotation as a major way to kind of play safe and also manage their risk at this moment, and which also our market now here in Nigeria, in Africa, is not left behind. That's also the way to go. We must look at what is happening in the environment and take decision run about it. Not just saying because others people are increasing rates, we must increase rates. No, you must look at what is happening. That's why also your trading strategy, also if you go around that direction, you must have what is driving your strategy. And also you must look at what is happening in the environment to see the environment, because the negative sentiment around the markets are slowed down this morning. We're seeing that a printout is coming because of this. Like I said, tech stocks, the one that drove the global gains we're seeing yesterday and today, trigger Europe market after seeing what happened in US, on the Wall Street yesterday. For me, investors should also play caution, because what is happening at the ongoing, to follow global economic forum, or World Economic Forum as is going. I think most of the speakers there, they are still not bullish on rate. That means that they are all downplaying the world. The rate cut is will slow down. It might be as from mid of 2024, or at from the end of first quarter. No, they are not just, because what they are seeing playing out is also part of why decisions are going that direction. And that's why you too are not happening in our market. We are seeing that the inflation figure continue to start to hit almost a decade high here in Nigeria, and also high inflation putting many of on investment window also on a negative return, and also the valuation we are seeing in real estate also is part of also seeing of the valuation depreciation of naira, that also influencing what is passing in the market, bringing any high currency to Nigeria market because of the always have an impact in the market. You can see the life of the Dangote cement, Boa cement, Geregu, and also Boa food. You can see how they change the market direction after bank has led. That is for this. I need to monitor what is the at their seeing Geregu at that price, seeing Dangote at that price. You as an investor or a trader, jumping at this point, are you going to gain? Is there any further performance or further incentive that will put apart from what buying to it for now? Will it sustain this price or the price will adjust to meet the performance of this company? These are the things that investors should trade at this point. Where that market is going heading to 100,000 index mark, that should not bother you much as a player to gain. Because if you are made gain and fail to take it, that is going to be also the kind of a bad news for you that after seeing your 100% return, 50% return, 200% return, at the end of the day, you didn't take it at the right time. That's why you must learn how to to buy and also learn how to take profit. Buying and selling is part of the game in any investment. Know exactly what you buy and why you are buying. Once you achieve your goal, you leave that position for another. Don't stay put in one the investment. Also, our market here, NGS, is not left behind. We're seeing a good performance on NGS right away. For me, it's a good one to end the week. Like I was saying that for NGS, we'll discuss more on this what the kind of know where we are because we must understand the big picture to know where we are at an economy, which sector and all those things, what kind of stuff. You need to know exactly what to do at this time because it's also telling the market is something. But if you look at how the market corrected it previously, exactly in 2008, when we had a meltdown, and what we are seeing, there's also the different scenario and fundamental between 2008 and 2000. When people call me that market will crash the way it crashed, I said it's not possible. They are different, but market will correct. Correction and crash are two different things that we should have in mind. And when market correct, there are two different things. Market pulling back is different from the market crashing. That means the scenario that made the market to crash there is different from what we are seeing now. But still, don't be greedy or don't be carried away with an up market. Know exactly what you should do at this time. It's very, very important. Even as we are making profit, yes, there are some stocks, there are some industries that are yet to move. What are you going to do? There's something that, yes, companies that their earnings are looking up, price have not moved. There are sectors that they are just coming up again, and their payments, we have not seen their recent payment to know where they are going, but their prices are still relatively low. What are you going to do? And that is why you must know the importance of defensive stock in your portfolio, importance of low cap stock in your portfolio, importance of growth stock, importance of defensive stock, one of large cap stock in your portfolio. You must know penny stock. You must know this at the back of your mind, and that is why in tomorrow, question and answer. Yes, the time is 1 hour, but I need to take our time to look at the big picture and the kind of stock that should be in your portfolio at this time. The sectors we are looking at after we are seeing this rally. Where do you want to stay and and stay put? You need to understand all this so that you know exactly what to do in this market. We are seeing new price go down and look at the kind of price factors, the kind of stocks that are moving the index now. Like I think we said it in this class, that our index is not well structured or it's not balanced. That only few stocks that about 70% influence on the index. That those stocks when they move, you see very different index jumping up. That's why you must go back and look at your sectorial and see which one have moved and not moved, and which one also the policy of government, either monetary or physical, what we are seeing now, or where the government is going to impact that sector, or which are the emerging sectors that they see potential for the future. These are because those that are moving now, yes, where far will they go? Will they sustain this price? That's why you know whether it's time for you to jump in or not. And like I said in one of the interview that nearly all the indicators in the market are showing that market is at what overbought region. And if this happens, the next like is correction. For that correction, it might be gradually, it might be once, but it is not very as bad as what happened in 2008. That is why you must also invest wisely and trade smart in this market so that you can also make money in any direction of the market. Like I say that you buy low, you sell high, you sell, you buy. These are the things in the market. Don't stay in the market because it's going up and stay away so that you can look at individual stocks and look at what we should be doing right away as investors in this market so that you won't get your finger born at the end of the day. There is opportunity, but you have to play smart and don't follow bandwagon. Let your investment objective guide you and also have a trade plan and trade your plan. These are something that is very, very key now. Yes, we look at the market is in green. It's open of cap stock moving. And if you look at index, we are not there yet. We are seeing that in market have moved for successfully 6 straight weeks successfully. Today is making 7 an up market. As you can see that year to date, market have been what in the red. Market only pull back just once since market the year open. Just for you to know, okay, just twice the market open for you to understand the strength of the kind of the orbit that the market is enjoying. I believe that we also look at it and see how we can manage this momentum and the earnings that is already on. How will the earnings play when these numbers start hitting more of them start hitting the market? You must understand this as well to speak. Yes, if you look at the market now, market is doing 94,152.87, which no market crossed 90 mark yesterday. Today it has crossed 92, 93. Or for me, get it also crossed 94. You can see the power of what high cap price, large cap, equity, that has impact on what this. But see, the market is doing 2,256.90 basic point, up by 2.48. That is, you can say 2.5 if you want to say. And we're seeing a positive market break. We were seeing 32 gainers against 28 losers compared to what we saw yesterday. The missed trade was there, but now we're seeing that market is still maintaining a positive trend. We're seeing that buyers are not slightly above what the sellers. Why we say that advanced